What is up, everybody? My name is Spencer. This is the Misfit Happy Hour. Today is the 31st of January. Today I have with me Shawn, the CEO of Amberdata. So Shawn, what's the backstory of yourself? How'd you get involved into the crypto space? What's everything?
Awesome. Thank you, Spencer. Stoked to be here on the show. So I got involved in crypto in like 2012, living in Silicon Valley, early Bitcoin mining, Litecoin mining, coulda, woulda, shoulda, but I sold it all too early. Um,
Definitely.
and, so really been in and around the crypto space as it evolved. In 2017, saw all the ICO come in and saw all of the, really movement from just a token to kind of potential business models and potentially the decentralization of the internet. And thought, you know what, if this plays out, this is going to be massively transformative to
Sure.
not only internet infrastructure, it's really the financialization of the internet, but potentially financial services. Fast forward, almost 5.5 years to today, and story has panned out, and we were really probably way too early initially. But today we've really defined the category of like, what does it mean to provide comprehensive visibility into what's happening in markets, on chain activity, and, so that people can build financial applications, whether it be for front office trading, portfolio management, research, middle office, risk, treasury,
Sure.
back office, fund administration, tax compliance. So kind of been a long journey, but super stoked to be here now.
Definitely. I mean, let's dive into it a little bit. So you're saying you're bringing visibility into the crypto space, right? And if you go out and talk to anybody on the street, right? First off, nobody knows what crypto is, maybe 20%, depending on what location you're at. Maybe in Miami, it's a little bit different. But what does bringing visibility mean to the space? What is your niche? What is the value add that you see? And then how did you see it initially?
Yeah. So first, I'll challenge you on kind of nobody knows, because we work with the smartest banks, the smartest hedge funds, the smartest market makers, the biggest crypto firms, and they have been in our building businesses. And right now, you would think everybody stepped away, but people are leaning back in. So I think I'll start with that, and then the what does it mean to provide visibility? So similar to TradFi markets, say, hey, you're trading, futures on CME, on crude oil, whatever.
Sure.
You
Sure.
trade through, say, TD Ameritrade. You do your trade, you get filled. You're like, you get a bad fill. Who do you call? You look at your broker, and then you're like, okay, well, I got filled at this. Why am I the last? Why am I at the bottom of
Right.
that candlestick? Right? What's going on? So
Right.
you escalate to CME, they escalate to the clearinghouse, and then good luck trying to ever figure out what happened. Right? So
Yeah.
with digital assets, and not so much centralized exchanges, because we connect into every spot market, derivative markets, options venue, and that's just like TradFi exchanges, where we have visibility into order books, etc., across those exchanges. But from an on-chain perspective in DeFi, you can actually see what happened before it happened, what happened, who was your counterparty, what was, was there slippage, why, who benefited. There's total radical transparency in digital assets that does not
Sure.
exist in traditional financial markets. Now, the majority of the market still trades on centralized exchanges, but I do believe that you will see DeFi become pervasive. And why is that? Every bank, every financial institution today, they're looking at DeFi going, wait, this is like, I can write it once, I can run it on somebody else's computer, and my customers pay the transaction fee. I want some of that. I'll
Definitely.
figure out the regulatory clarity.
Yeah, of course.
So I think it is the future of financial services, and it won't be blockchain in the future. It'll just be like, that's just back end stuff. This will be where the future of financial services exists and trading. So in the
Interesting.
transparency part of that, yeah.
Interesting. I mean, so you've basically known about it since the inception. You've been involved. 2012 is as early as
Pretty
one could
painful,
possibly
yeah.
get,
I could have been
First
2 years
question is,
earlier, but then I probably wouldn't be working.
how were you buying crypto in 2012? Were you going to an exchange or were you buying it
Well, I was
peer-to-peer?
mining. I was mining in 2012,
And how'd
and
that go?
I wasn't buying. It was really good actually back then. You used to get 25 Bitcoin per block, and you know, we've had many havings since then, right?
It's
And
fantastic.
it was like, yeah, there was like really the beginnings of mining pools and stuff, you know, free ASIC. And then the ASICs came online and it became much more of a, you had to have a lot of money and be well funded and have cheap electricity to do it. And, you know,
Right.
I
Right.
lived
So
in Silicon Valley and that wasn't really a thing.
yeah, that's fair. That's fair. So how have you seen the market progress, right? So 2012, you're mining Bitcoin. 2017, of course, was the next period in which you talked about ICOs.
Yeah.
When were you involved in data? Was it since 2012 or was it inception? When was
No,
the inception? And then
yeah. So I was, I was interested. So me and my co-founders, we've worked in various data businesses and we've always
sure.
been interested in looking at data, but it became real in 2017 when we were like, the inception was, if Ethereum is a global computing platform and it can be disruptive to AWS, what will be that killer application? And they will need operational telemetry to know how to see what's happening in this trustless environment. Because how do you
Sure.
trust a trustless environment if you don't know what the hell's going on?
Yeah,
It's
no.
all, it's like a complete, it's a shell game otherwise. So this brings radical transparency. So we're going to bring that search, analytics, insights, accounting, etc. visibility. And like I said, we were way too early. That was pre-DeFi, that was pre-NFTs. Most of those ICOs don't exist anymore. Some of them do. MakerDAO is still around.
Oh, they
um,
exist, but they're at zero in my wallet.
yeah, exactly. I got a bunch of those too. Yeah, right.
So
So yeah, that we saw that. Now, you know, that's how we got into it. And then as the market evolved, we secured early market makers and hedge funds and fund admins and accounting firms, but just because of the operational complexity of what's involved in specifically the Ethereum ecosystem.
sure.
Because if you think about what is Ethereum, I don't know how deep you guys are in blockchain, but you know, Ethereum is a globally decentralized database. It is an application server. It is a
Right.
gamified incentive mechanism to, create incentive loops that allow you to see inputs and outputs. And, you know, if you want to programmatically act Arb between centralized exchange, decentralized exchange, DeFi protocols, etc., it's radical.
Right.
There's just some of the smartest people in the world full on are all in on this and have been, and doesn't matter, everything crashed in the last year, things are still moving forward.
It's fascinating. It's
Yeah,
fascinating. Part of the reason I asked kind of the maturation of the marketplace, right? One
yeah,
thing that I've seen in particular is 2017, there was just blatant arbitrage, right?
yeah.
And now, as DeFi kind of has emerged over the last couple of years, the Arbs cross exchange from centralized to DeFi, it's mimicking some of 2017 in a space, or in a way, right?
I
And
mean, yeah, yeah, you're spot on. Like, if
yeah,
you think about it, so DEXs do not work without arbitrage to centralized exchanges. Almost every
right,
single one of them, the price discovery process requires arbitrage with centralized exchanges. So you're spot on. And then you add all the perps and the yield curves and perps, and now you have derivatives and you have options. So the evolution of the whole market space has become more and more and more sophisticated and more like traditional financial services. And
right,
like perpetual futures contract is actually an innovation that came out of digital assets, and the adjustments of the funding rates to incentivize long or short behavior or those yield curves,
yeah.
and then the creation of derivative options, etc. It's really allowed sophisticated TradFi players to come in and go, oh, I know this game. I know how this works. And
Right.
I love volatility. And the vol on this is 6x the SPOO, right?
Yeah, definitely. I
Right,
mean,
right.
besides December of 2022, but we're back. We're back in business finally. January didn't disappoint. So, all right. So from the data side, I mean, there's so much to talk about. One is, how is it impacting everything that you guys are doing? How is it impacting the efficiency of the market, right?
Mhm.
Um, are players in institutional money coming to you, hedge funds, hedge funds, more of the traditional finance people coming to you and saying, hey, I'd like to get involved? Or are these crypto native funds already reaching out and saying, hey, I want to get involved? And then how are you seeing that capital being deployed impact the market efficiency?
Yeah. I don't know if I can talk to the impact of a market efficiency, but we do we provide the financial market infrastructure so people can understand the market, and then whatever their strategy or whatever their customer strategy was, account for that, right?
Sure.
And so like our customer base, like if you look at our Series B, we had NASDAQ, Susquehanna, Chicago Trading, National Bank of Australia. We have some big brands. You look at our website, I'm not going to rattle off names. We have some serious old school financial services, whether they be funds, whether they be market makers, the banks, accounting firms, tax firms. What we do is really hard. So we bring that transparency so that people don't have to spend tens of millions in years in infrastructure investment just to be able to get the data to act. So we're accelerating the adoption of digital assets for traditional financial service players, market makers, funds, accounting firms, tax firms, etc. So they don't have to build that infrastructure. So I think we do make the markets more efficient. And it's a couple specific examples of that is many of our customers are market makers on centralized exchanges or even CME, and there is Arb between centralized exchanges across derivatives and central, the actual digital assets. Even in the lending protocols, what's the health criteria of all the participants in that pool, and do these people need to be liquidated? What actually cleans up the risk for everybody that participates in that protocol, which is better than relying on a counterparty today, right? So that's kind of what happened with the last crash. It was like a bunch of people were their counterparties, and they were more leveraged than they should have been. And guess what? Counterparty risk is a thing.
It's a thing that we forget about until we need to remember.
Yeah.
So, well, that's fascinating. One thing that I want to talk about specifically is speed. How are you guys attacking the speed game? And my understanding is very limited. So could you talk to me as if I was a golden retriever, explaining it to the world?
Okay. So there's relative speeds. So most crypto exchanges operate in cloud vendors. So therefore, if you co-locate in the same cloud vendor, hey, you're effectively co-located. You might as well be in, the exchange, right?
Right.
Most people have to traverse the public internet, which is kind of like the IEX speed bump. It makes it fair for everybody.
Sure.
So unless you're a market maker or a high frequency trading firm and directly connecting to those exchanges, it's not like in TradFi where like microseconds matter for the most part. Now on chain is ridiculously slow. Like the average block time in Ethereum is between 11 and 15 seconds. That's an eternity in TradFi.
Oh yeah.
with leveraged assets, give me a break, right? But that's like the state of the art. So the high frequency game has moved to the pending transaction pool, and a lot of that Arb happens in MEV. I don't know if you guys are familiar with MEV.
Yep.
And like we don't participate in the speed of on-chain, but what we do is we've been collecting pending pools since 2017. So people train their models, they go back and they back test and they quantify, and they can post facto analyze, were they efficient, were they effective, did their strategy work, why didn't it work? So we provide that historical data. Same thing goes for from an order book data on the centralized exchange, whether it be spot markets or derivatives markets or options markets. We capture those time series events in the order books, every level, every insert, update, delete in the order book. And market makers or programmatically acting kind of pseudo high frequency firms, what they'll do is they will they'll train their models, they will improve their models, and they will deploy those in real time without us as an intermediary, because we would be adding latency, right?
Yeah, definitely.
Yeah.
That's understood. Coming from, I mean, you spoke to your background previously where it was previously in Silicon Valley. What specifically in Silicon Valley? And then what brought you in?
Yeah, so I've done a bunch of different things. I've really spent most of my career as an engineer. I've done venture capital. I've done derivatives trading. I've done I worked at an advertising tech company where we were doing real-time analytics and attribution on terabytes a day of data and programmatically placing billions of dollars of ad spend.
Yeah,
So it's kind of like high frequency trading. So it's this convergence of technology, trading, derivatives, and data that make us uniquely positioned. And that's just me. My co-founders are incredibly deep technologists and have built, scale up businesses. And a lot of our edge against anybody else that does data is they just don't have the institutional or enterprise data chops to do it effectively, efficiently, and where people can bet their business on you. You're just
right.
going to work, right? They don't have to worry about it. They pay you a lot of money, and for that, they don't have to worry about all of that. It just works, right?
Definitely, definitely. Betting your business on you. That's the one thing within data that seems to be the most important, right? I mean, you guys are going to get phone calls every second for the next eternity if any of your servers go down.
Yeah.
How are you avoiding that? What's the risk metrics that you guys are using, or if you can even speak to that?
I can totally. So
Okay,
we monitor every like on the centralized exchange, we
sure.
monitor every exchange, every pair, and the connectivity to those exchanges, the deviation from kind of expected, for every pair on every exchange in real time. When we process that, we also have monitoring in real time on the entire transformation ETL, kind of how do we store that data? How do we process that data? And from a serving perspective, we monitor every API endpoint, every web socket connection, and every, all of the infrastructure to make sure our customers are getting the service that they are expecting. So from basically collection to processing to serving, we monitor that entire pipeline with aggressive service level objectives, and our customers expect certain service levels and latency, and it's like it's some of the people that are in the data business is they're doing this as a hobby, and don't confuse your hobby with my profession.
Fair, fair. That's a fair quote right there. All right, so let's talk about some of the struggles of the data industry, right? I mean,
Yeah.
we can talk to the benefits of using it. It's incredibly important within trading and within a lot of different other systems and businesses. What's the hardest thing that you guys have run into? And then how have you tackled it?
Yeah. So I think that from a centralized exchanges, whether that spot markets or derivatives or options, that's a data volume and data velocity problem. Tremendous. We have 8 petabytes of data from centralized exchanges. The volume, the velocity, and people calling us, 50, 60 million times a day, right? We have customers that call us multiple million times a day, just single customer, right?
Oh yeah.
That is how do you, when the market's humming along as normal, you can kind of scale for that. But when the market 4x trading volume, how do you dynamically scale so your customer doesn't know? That's a really hard problem, right?
Right.
And to make it seamless, it's not always seamless, but for the most part, we shoot for seamless, right? That's difficult. Now, the second complexity is many of these exchanges are changing their APIs all the time. So if we don't have monitoring and we don't have relationships with these exchanges and data redistributions and have a phone number we can call, like it's impossible to support. So that's a really painful part of our business. It's really, really hard, and it's very difficult to replicate. Now, on the on-chain data, that is actually a far harder problem than market data, because market data is like, yeah, it's hard. There's a lot of secret sauce, but it's market
Right.
data. There's a lot of people who do market data, right?
Sure.
Refinitiv and Bloomberg, they've built massive businesses on this. But now on-chain, this is like makes your head explode, the complexity, because like I talked about earlier, blockchain is just a database. It's an application server. It's a currency. It's an incentive mechanism. All that's in encrypted payloads with blocks that are stateless, that have no context to the block before.
Right.
So we have to process that data, decompose those transactions, map the crypto economic mechanisms of each of these protocols, put a name and put a price on those things, and create a time series. And it's really, 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 really hard. It's awesome.
Sure.
It's fun. It's
Right.
amazing. But man, it's really difficult. But that's our edge, is that nobody, period, full stop, that is in this data business can do what we can do. We can tell you, give me every liquidity provider in Uniswap V3, give me what's their P&L, do they have impermanent loss, did they make their fees from tokens, did they,
Right.
give me the top 10, okay, switch to Aave, show me every pool, whose health criteria needs to be liquidated, and is it profitable, right?
Right.
Like, so
Right.
like it's really, really, really hard. And that's oftentimes some of our really OG crypto customers come in and they just tap out. They're like, our business is trading and we know how to do this for Ethereum, but now there's all these layer twos, and how the hell, we don't want to do this anymore. You guys are really good at this. We'll partner, we'll tell you what we want, what we need. And then that's why we have this edge, is
Right.
that it's really, really hard.
How many chains are you guys supporting currently?
We support like 14 chains right now.
14.
It's we obviously support Bitcoin and Litecoin, Zcash, what have you, but Ethereum,
Sure.
and then Optimism and Arbitron and Polygon and Avalanche and Binance Smart Chain, and basically the net is any chain that has traction that institutions care about. I don't care about the latest chain that nobody's using, that isn't on it's on a test net, whatever.
Sure.
Good luck.
Right.
Right.
Sure.
Yeah.
What is all right, so what happens when a chain goes down, right? And obviously Ethereum, it's been years. Bitcoin, it's been years, but
Solana not. It's pretty
Solana,
often.
how does that impact you guys? How does that impact the day-to-day? And I'm sure
Yeah.
a lot of phone calls.
So, interestingly, so like you said, Ethereum doesn't go down. They do have hard forks, and it's really stressful. And we are highly available and run many, many, many nodes and many different data centers. So we can, no matter what, capture everything that's going on, and turn that into meaningful, actionable information for people. Now, Solana, for example, they go up and down quite a bit, and they have a lot of breaking change maintenance, and it requires a massive investment to run multiple Solana nodes and to be able to stake those so you can participate in that network and worry about slashing and worry about all of this stuff. It's non-trivial.
Right.
And fortunately, we've worked with the Solana Foundation. We were very early, and we've been doing that, but it's not easy. We literally have 24/7 coverage and monitoring, just like we have for market data for every one of the blockchains. We can tell you, is a block behind? If so, do we have all the transactions? Do we, we'll do verifications to make sure that the checksums in the block match all of the transactions, to make sure that the data integrity, because for example, time series historical account balances on Ethereum. Say you wanted to say, chart my P&L over the last 365 days. What did I hold? Did I make any money? Did I lose money? How do I pay my taxes? That's impossible on Ethereum. All you can tell you is what was in my wallet in this block.
Yep.
But with Ethereum and a lot of DeFi, there's these internal transactions that happen. They're not even really, they're not super visible. You can deduce by capturing what happens in Ethereum virtual machine, or what's in the mempool, but it's really, really, really complicated. So, making sure that you're not missing that a single transaction ever, and that you didn't miss some, I can't think of it, Ample does this rebasing, a rebase. That's it touches everybody that holds it. You can't mess that up, right? So it's really challenging. So it's just having all that monitoring in place to make sure, in 24/7 support, that if there's a hiccup or a change in the heartbeat, that we're on it and we're usually highly available. We fail over. There's massive redundancy. There's a lot of automation. There's a lot of monitoring, that type of stuff. So it's all the unpretty stuff.
I mean, it's got to be talked about, though. It's got to be talked about. All right, changing it up, making it a little bit happier. What's next 6 months? What are you guys most excited about?
I think, what we're super stoked about is we continue to be huge fans of DeFi. I think DeFi really will continue to be the future there. DEXs are already doing more trading volume than some of the centralized exchanges. I think more and more and more derivatives, both centralized exchange derivatives, whether that be on Deribit or DeFi options, like we cover Lyra and Squeeze and Ribbon and all the top DeFi options protocols.
Right.
But we're also starting to see many of the US-based traditional exchanges coming in and saying, hey, with FTX gone, there's, the only place to trade, they used to be the only place other than CME, which doesn't have a lot of volume, to trade US dollar denominated futures. So they're now opening non-perpetual forwards, perpetual forward contracts, or excuse me, NDFs, which are like perpetual, so non-deliverable forwards, or they're doing structured products, which are either ways. It's a derivative or it's an option, and they're offering to their customers. So we're like, wow, the banks are doing this and the exchanges are leaning in. I could see a world where this year or in early next year, where you have the large US exchanges trading digital assets, crypto. The other major trend that we're seeing is the tokenization, securitization, whatever you want to call it, of real world assets. We're seeing that in the form of, one of our partners and customers, National Australia Bank, just announced that they are now taking currency pairs and have tokenized those into stable coins backed by National Australia Bank, and it facilitates visibility, it eases settlement, you remove a lot of latency in the system. It's awesome. You're seeing the same thing with JP Morgan. You're seeing people doing bonds on chain like UBS and KKR, and you start to like, wow, this just becomes a financial fabric to create, it's a better infrastructure for the future of financial services that is more efficient, more effective, and global by design. So I think that's where, and that will be the next bull market as you see these things come in. And same with derivatives. The other thing about derivatives is a lot of the TradFi players are like, I don't want to touch anything right now. I'm afraid of custody. And I think, so what you're seeing is one, banks they've been in the custody business forever. Guess what? They're going to be in the custody business and people are going to prefer to use them.
And they can charge more.
Right. So you're going to see banks move into custody, and we're working with many of those. And then the second thing you're seeing is people are like, you know what? I don't want to even worry about custody. Just give me a dollar settled futures contract and I'll get exposure to the asset, and I'll have optionality, I'll have leverage, I'll have everything. And I don't have to worry about the counterparty risk that someone stole my money.
Definitely.
Right. So that's where I see things going this year.
Definitely. That's exciting. I mean, the biggest thing that I feel like everybody's waiting is for that prominent US player to kind of step up, right?
Yeah.
Especially in the derivative space, there's not enough regulation or clarity within that regulation to kind of bring that in. I mean, sidestep with the CME, some of the front months and second months are really showing some volume pickup, especially after the FTX. So that is something interesting. That's incredibly interesting. You're speaking about the banks coming in, all of these institutional, traditional finance players coming in. What's the base layer? From a data perspective, is Ethereum, in your opinion, capable enough? Or do we have to roll up, or do we have to do a layer 2 solution? What are you thinking?
That's I don't know. That's the $1 billion question, because it's Ethereum's to lose, in my opinion, from a financial fabric. But hey, Avalanche has done a kick-ass job of coming in and doing things. Now, can they move all of the traffic? Possible, especially start to getting like Trader Joe V2 on there that would kind of remove some of the issues with Uniswap V3 from an impermanent loss perspective, and it's fast and it's efficient. Yeah, it's possible. Like Polygon, they're doing some pretty interesting things. Like, you can just walk through. I can name 20 different blockchain projects that are all high potential, but I don't know, right?
Nobody really
Like
knows. Yeah.
Bitcoin, the value prop of Bitcoin is store of value, inflation hedge, whatever you want to call it. I don't think that goes away. It's we don't figure out the debt ceiling. It's schmuck insurance because these guys are idiots, and they're playing chicken with a train, and like that thesis still holds, I think.
Sure.
I don't know.
I mean, that's why most of us got into this space, right?
Right.
If you're believing in crypto, you think there's flaws within traditional
Yeah,
finance, but
right.
yeah, no, that's, I mean,
Still
it's
have a little
fascinating.
crypto anarchist in me, even though I'm running a company now.
Yeah, I think it's just good to be open about
Yeah.
the idea in general, right? What are we trying to solve? What are we doing? And then is there a potential solution, right? We're all drinking the Kool-Aid. What are we
Yeah.
actually drinking, you know?
It's pretty interesting though, Spencer. One of the things that you said, I just want to tease apart, is you said regulatory clarity, right? And
Sure.
I got completely schooled like 2 weeks ago in New York City talking to one of our customers that it's a massive, massive hedge fund. And they're like, what are you talking about? The SEC's in the business of regularity, unclarity, so they can walk around and give people speeding tickets. Doesn't matter if it's crypto, doesn't matter if it's ESG, doesn't matter if it's emerging markets, doesn't matter if it's electronic vehicles. Everybody hits the SEC because they're not clear. And and I think that with the current environment, that's going to continue, except not only is the SEC, there's every single country in the world has a regulatory body that has an opinion, and there's never going to be regulatory clarity. And
Right.
people just need to make some bets. And guess what? If in the Industrial Revolution, when they were making laws back then, they were worried about sharecropping laws. They weren't even thinking about Industrial Revolution in the mechanization of industry. They were
Right.
like 50 years behind. I think the regulators will catch up. I have a lot of respect to a lot of the regulators that have talked to us. They're very smart people, very sophisticated, trying to do the right things. It's a
Right.
really hard problem, and it's global. It's not
And it
just the
takes a lot
US.
more time than people think,
Yeah.
it
I
impacts a
think,
lot of people.
yeah.
All right. Yeah. So, I mean, that is something that I'm very excited about. I think it's going to come. It's inevitable at some period in time. And I think it's going to bring a lot of value back into the U.S. in terms of liquidity
I hope so. Right?
providers. I mean, it's a noticeable difference. I don't know if you guys are seeing this on the data side, but just sitting here looking at the depth of books, there's a lack of liquidity in the U.S. exchanges.
Yeah.
And some of, in the Binance US's and some of these other ones, relative to some of these perp markets and CFDs. Now,
Oh,
we can
totally. Yeah.
we can argue about CFDs all day, another story, and I could talk about this for hours. It's a fantastic innovation, but there's underlying risks as well. What do you, speaking of perp market, I'm assuming the easiest ARB to talk about that most people can grasp is the perp ARB, right?
Yeah.
What are you guys, how are you guys pulling data? How are you guys picking exchanges? So we'll start with there. Perps are across the board, right? So you have centralized exchanges, you have decentralized exchanges, you have cross ARB from centralized, decentralized, then decentralized, decentralized. How are you guys pulling all that data? And are you seeing a lot of interest?
So that has been a trade for 2 years, more than 2 years, 3 years. So it's real, it's legit. And all of the lending desks used to participate in that, playing the yield curve, just like you're paying 2-year, 10-year, 30-year bonds. And you're like, what's the spreads, right? So, and perps are the front end of that curve, at the very, 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 very front end of that curve, because they're like right now, right?
Right. Yeah.
So what we do is we connect into every spot market, every futures exchange, and we have through our APIs, you can say, hey, give me spot market on Coinbase and front month, back month, far month futures contracts on this exchange, that exchange, and then you can look at what are the spreads, is the market in backwardation, what's it in contango, what's my effectively my cost of carry or my yield I'm going to generate from this.
Right.
And it's not like I'm trading crude oil where it's like my cost for storage or what have you, or shipping costs. This is like it's purely a financial arbitrage that it's implied yields. So tons of customers are all day long looking at those spreads on, you know, it's usually spot versus derivatives,
Yep.
or even like CME versus like, you know, what are, like, for example, you can go to Deribit today and look at kind of the skews, and then you can overlay those with CME, and CME is less liquid, trades sometimes more, sometimes less, usually more, right? And you're like,
Definitely.
so that's also, and like, you can just walk the entire options chain on every expiration and just look at that. There's a bunch of ways to look at how do I play those yields, whether that be there's you can look at implied volatility versus realized vol. You can look at vol surfaces on CME versus Deribit versus Binance versus, you know, what have you, LedgerX, etc.
You said background was obviously backgrounds in derivatives a bit. What derivatives were you involved with?
I'm still an options trader.
Are you? Perfect.
Yeah.
How are
Yeah.
options on previously, I'm assuming traditional equities, or were you in
Futures
commodities?
options. Yeah.
Futures options?
Yeah. Primarily energies. Yeah.
How are you seeing the development of options over the last year?
It's
from
the
your
future.
side?
Yeah.
Yeah,
It's happening. Yeah.
it's incredible, right? Like
It's incredible. It's exploding. It's going to be just like in equities or in treasury bonds. Like the options market will be bigger than the futures market, and it will be bigger than the spot market. And I
right.
think that's going to happen. And like, we just acquired Genesis Volatility, which is now 80 derivatives. And I think you guys talked to Greg. We're
Yep.
really bullish on derivatives and options. Yeah.
I mean, I trade these things every day, all day.
Yeah.
They're fantastic. They're a lot of fun. The spreads are getting tighter,
Yeah.
and there seems to be a lot of interest, right? Especially the capital efficiency relative to some of these other products that are being offered. So what's the biggest thing in terms of the futures market? What are you guys seeing in futures market? Are you seeing a lot of interest in there? A lot of this market in general has been driven by that product, particularly in perp markets. But what about the outright markets?
Outright meaning spot?
Outright meaning the calendar futures.
Okay. I mean, I don't know the numbers off the top of my head, but I would say the majority of our institutional customers who are programmatically acting operate in derivatives, whether that be futures. And then, you know, depending what they're doing, if they're position trading, yeah, it's probably futures or options. If they're market making, it's probably futures or options.
Yeah, definitely.
Right. And then, yeah. So, and even some of our TradFi customers, they're making markets on CME, even though there's not a ton of volume there, but.
Right, definitely. Yeah. Are you guys supporting CME? Do you have endpoints for CME?
We've been partnering with and working with them, and we're building that out.
Okay.
It's not quite ready to do that.
Perfect. Yeah, CMEs, I think, I mean, they are a step behind in terms of liquidity, but they're very interesting.
Yeah.
They're very interesting.
Yeah.
All right. So for the last little bit, let's talk about as much as you can share about data that you're seeing right now, whether that be in reports that you guys are publishing publicly or anything that you think is just actionable or interesting. I mean, we're going into the FOMC tomorrow. Maybe you guys know what Jay Powell's going to say.
I don't.
Yeah.
I don't think anybody does, but I mean, you'll figure it out. We just published a really long report, 80 derivatives, you and St. Clair and Greg, and just a, you know, really kick-ass lineup of people. So go to the, sorry for the shameless plug, but go to the Amberdata.io website.
I read it.
It's a kick-ass report. I actually have it on my laptop right now. It's solid. It's really good insight because it has multiple years of look back.
Sure.
And, so a lot of information there. You know, I'm super bullish on the whole derivative space and options, and, you know, absolutely. With going into the you know, FOMC meeting, not investment advice, but the skews are crazy right now.
Sure.
Like just looking, you know, way out of the money options are trading way over theoretical value right now, just like massive, like 2-3x at the 100,000 June strikes. You're like,
oh yeah,
like what's going on?
Yeah, and that just started to come into the market, what, the last week and a half?
Yeah.
I mean, you started seeing it in the futures curve too. Everybody just went buy all of a sudden?
We're kind of like, we're in this global macro perfect storm for crypto, because you have the US government playing chicken with the debt ceiling. It's in where we risk a downgrade, we risk major currency issues, we risk, like, I don't think they can control inflation like they think they can, and you have, I don't think that we can service our debt above like 6%. So they're like in this really interesting situation, and
Sure.
that's probably some of the saber rattling around crypto regulation. It's more protectionist politics than it is perhaps you know, protecting people. It's more like protecting, a lot of other things.
Yeah.
So we're in a really interesting situation, and if, depending on what your outlook is, it's definitely an opportunity to make some bets.
I mean, that's the name of the game, right? That's the name of the game. We all come out here, we think we got an educated guess, but it's just a bet, Well, that's fascinating. All right, for the report, I can speak to it. I've read it. I talked with Jalen about it as well. So fantastic report. I highly recommend reading it for anybody that's listening. Let's wrap it up, and then I'll let you do the shameless plug for Amberdata. So
yeah, thank you very much, Spencer. Really enjoyed being on the show, and love to come back, or whatever you guys want to dig in on something deeper, just let us know. We can come back and talk numbers. Shawn Douglass here, co-founder and CEO at Amberdata, amberdata.io. Come check us out if you need digital assets data for anything.
Perfect. Thanks for hopping on.
Thank you so much, man. Really enjoyed it.
Bye.